Hey friends, I'm super pumped to share something special with you today. A trading strategy that has the potential to deliver consistent, profitable results with precise entry and exit points. If you're tired of complex setups and cluttered charts, this one's going to be a game changer for you. What makes this strategy stand out is its simplicity. We're not using any complicated indicators here. In fact, the only tools I have on my chart are two basic EMAs, the 10 EMA and the 20 EMA. But let me be clear, these EMAs aren't the core of the strategy. They're simply there to help visualize the market trend and direction more clearly, making it easier to spot high probability trade setups. I know many traders get caught up in using tons of indicators, which can lead to confusion and missed opportunities. That's why this method focuses on price action and market structure while keeping the chart clean and easy to read. Stick with me as I break down every detail step by step. I'll explain how to identify the ideal conditions for both entry and exit so you can take trades with more confidence and clarity. Plus, I'll share some pro tips on how to manage risk effectively and avoid common mistakes. By the end of this session, you'll have a complete understanding of how to apply this strategy in real-time markets. So grab your notebook, stay focused, and let's dive into this powerful yet simple approach together. Let's make those trades count. The first thing you need to do is head over to the Tools panel on your trading platform and select the Triangle Pattern tool. Don't stress, this tool is available on pretty much every trading platform out there, so you won't need any special setup or paid add-ons for this. Once you've selected the Triangle Pattern tool, you'll notice it has 4 anchor points labeled A, B, C, and D. Think of these as the key points for drawing the triangle on your chart. All we need to do here is draw a simple triangle pattern using these 4 points. Sounds easy, right? Don't worry. I'll guide you through it and you'll see exactly how it works. Now, let's get to the fun part. Marking the levels. Start by finding the recent lows on your price chart. Got them? Great. Now, connect the lowest points with anchor points A and B. Next, find the highs and connect them with anchor points C and D. It's important to take your time with this step because these connections will define your triangle structure. The anchor points on the tool are completely adjustable, so you can reposition them as needed to fit the price action perfectly. This flexibility helps you adapt the pattern to any chart, whether it's a 5-minute, hourly, or daily time frame. Here's where things get interesting. Once you've drawn your triangle pattern, you'll notice something cool. The line connecting A and B acts as your support line. The line connecting C and D acts as your resistance line. Now, why does this matter? Because these lines give us a powerful clue about potential breakouts. If the price crosses and closes outside either of these lines, it signals a potential breakout from the triangle formation. Think of it like this. If the price breaks above the resistance line, CD, it could indicate a bullish breakout. If the price breaks below the support line, AB, it could indicate a bearish breakout. This is exactly how we spot potential trade opportunities. Simple, right? All right, let's jump straight into a live trade. No edits, no filters, just the market doing its thing, raw and uncut. I'm working with the Bitcoin versus US dollar chart today, and I'm using exness.com for this demo. I've always preferred showing my strategies in the live market rather than explaining them afterward. Why? Because that's the only way you'll truly get the feel for how the price moves and reacts in real time. Watching it unfold as it happens is where the magic is. You've probably seen a lot of YouTubers break down strategies after the market is closed. But here's the problem. Most of these strategies rely heavily on indicators, and 98% of those are lagging indicators. Lagging indicators by nature are reactive. They react to price after a move has already happened. They might look great when you're reviewing historical data, but they usually fail to give reliable signals when the market's actually moving, right in the heat of things. That's why I prefer showing you trades in real time. It's not just about the strategy. It's about understanding my decision-making process, my psychology, and how I respond when things get intense. When you see me take trades live, you'll see how I assess risk, spot opportunities, and manage both wins and losses. It's transparency at its finest, and it'll help you learn how to think like a trader, not just follow a formula. So what's the ideal condition for entering a trade? Well, I usually look to trade near support and resistance lines. These are key zones where the price tends to either reverse or break out. They're perfect for planning trades with lower risk and better reward potential. But since this is all about teaching you, I'm going to take a little risk here and enter a trade that's uh, f- slightly off the ideal entry point. Why? Because I want you to learn something more valuable: how to avoid common mistakes and manage risk properly. By entering the market just a bit early, I can show you how to tweak your stop loss placement, adjust position sizes, and implement solid risk management strategies in real time. This is the kind of knowledge you'll need when a trade doesn't go as planned. Because let's face it, not every trade will be perfect. All right, so here's the situation. I want to take a short trade here because I believe the price might touch the resistance line and then bounce back down. This is a key point where the market tends to reverse. But as always, we'll need to see how things play out in real time. So far, the price is actually looking like it might break that resistance line, and that's where things get tricky. This is one of those moments where the market tries to mess with your head. Many traders would exit the trade right here because they start fearing a loss. It's natural. Fear is something we all face. But here's the thing. I'm not going to let that stop me. I'll wait until the candle actually closes above that resistance line before making any decisions. I need to see concrete confirmation. Now, that green candle does close above the resistance line, but it's got this long wick on top. That wick is telling me something important. It shows that there's still a lot of selling pressure at play. Sellers aren't done yet. And this is a subtle clue that the price might not stay above that resistance for long. So even though the candle closed higher, I'm not jumping into a bullish mindset just yet. Instead, I decide to hold the trade for just one more candle to see how the market reacts. And here comes the red candle. It closes near the resistance line, and that's a critical sign. Not only that, but I'm also seeing the 20 EMA starting to cross the trend line. This is a strong indication that the market might be gearing up for a move to the downside. The selling pressure is growing, and this could be the moment I was waiting for. So I stick to my plan and hold on to the trade because everything is pointing to a potential reversal and the risk is still manageable. This is how you need to read the market. Don't let emotions or fears rush you into making hasty decisions. Stay patient, trust the process, and wait for confirmation. Let's see if this trade plays out as expected. All right, our trade has finally moved into profit. Awesome. Now, the next step is to set a clear target for this trade. It's super simple, no need to overthink it. All we're going to do is grab the Ray line tool from the tools menu and extend both the CD line and the AB line a bit further out, like this. See how I'm stretching both lines? This gives us a nice visual guide for possible exit points. I'll go ahead and draw one more line for the CD zone as well, just to make sure we've got all the key areas covered. Now, why does this matter? Because these extended lines represent important support and resistance zones where the price might react. The plan is simple. Once the price gets close to these extended levels, I'll look to close the trade and secure profits. And look at this, the price is already nearing the support line right in the zone I marked earlier. I entered this trade with a $292 margin, and now we've bagged over $100 in profit, which is roughly a 35% return. Not bad for a single trade, right? Since we've hit my target and locked in a solid gain, I'm going to exit the trade here. Remember, it's better to secure profits than to chase more and risk giving it all back. Consistency and smart exits are key to long-term success in trading. That's it. Trade closed, profit secured. On to the next setup. All right, I've spotted another solid trading opportunity here. The price is once again hovering around the support zone, and I'm watching closely for a breakout. But look at this red candle. It failed to break through the support and keeps getting rejected at that level. That rejection is a strong sign that buyers are stepping in, so I'm going to enter a long trade right here. I'm using the same margin as the last trade, keeping things consistent. Now, let's sit tight and see how this trade plays out. Remember, the top resistance line is my target for this setup. I'm planning to exit the trade as soon as the price gets close to that level. No need to get greedy. And there it is. The price has just hit my target zone and I'm locking in profits right here. I just secured a profit of $285 on this trade alone, which is nearly a 100% return. Pretty awesome, right? That brings my total profit from both trades today to over $400, which is a solid gain for just two trades. Now, a quick tip. I highly recommend using the triangle pattern for your setups. It's a reliable way to spot accurate entry and exit points with minimal guesswork. Patterns like this can really help you stay disciplined and avoid emotional trading. All right, that wraps it up for this video, guys. If you found this helpful, make sure to hit that subscribe button for more trading content. Don't forget to like, share, and drop your thoughts in the comments below. I'd love to hear your feedback and answer any questions you have. Take care, trade smart, and I'll see you in the next one. Happy trading.